Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Super exciting week. Probably the most exciting week that we've had in the markets since the cerveza sickness, since Charlie 19er. So S&P 500 down 9.1%. Looking like Monday is also going to be a gap down. In other words, we'll probably establish another gap and more selling on Monday. Even though the RSI is super low here, 23 on the daily, we just had selling pressure going all the way into it. I think people are going to be terrified over the weekend and nothing they can do about it. And I think it's going to gap down and sell more on Monday. So next levels to watch on the S&P 500 are going to be right here around the, 49.77, somewhere around there, 49.70. After that, I think this is really going low. We thought since the beginning of the year this would be a widowmaker, and it's finally happening, which is really exciting. Yeah, this thing's probably going to hit down on the COVID lows over the coming year or two. I think these are the all-time highs up here at 6,100 and they'll stay the all-time highs for years. But maybe I'm wrong. We'll see. But 17% down from all-time highs. So we've entered into a bear market. I believe that is confirmed. And we're going to turn that frown upside down because we got a lot of new listeners here, and you guys came to the show at exactly the right time. And we're going to show you how to make money from exactly what's happening in the markets. First things you got to do, get out of the tech sector and any of the general equities, like the NASDAQ or Dow Jones or the S&P 500. And we'll show you exactly what to put them into, or at least what I think is going to make money. All right, the NASDAQ so this technology is down 9.8% for the week, so just getting throttled here. That bear flag played out as well. Dow Jones Industrial Average, this one is down 7.9%, getting slaughtered with likely more to come. Just run through the tech stocks real quick here. So we got NVIDIA. You can see this one selling off. Apple, same thing, big gap downs. Microsoft, same thing. Amazon might actually get a little bounce here in Amazon. We'll see on Monday. And Google actually was looking like it was going to have a nice little bounce. I thought of running like an option on this thing in the heat of the moment. I'm recording on Friday here, and I forgot to eat all day. I was just staring at the charts and buying. And so I went from 20% cash to 17. I spent 3% of the portfolio, moved 3% of the cash into equities, which I'll show you what I did shortly here. Looking like we might have a little bounce here in Google, and I almost played it, but I don't know. You got a gap right here. It's kind of compelling, but then if you look at the action, we haven't had a real reversal yet here in the MACD and the histogram. Even if you go out on the 30-minute here, it just kind of dropped off right there. Had we had like a little bounce right there, I probably would have played it into like a swing trade, but didn't get it. So it's probably going to, as much support as you have right there, it's probably going to fall on Monday as well. Meta gapping down. Tesla, I think they're 50% off their highs here. Yeah, 50%, 51, something like that. So just getting hit. And Palantir, same kind of thing, just falling out of the sky. All right, and the dollar is down 1.1% for the week. As far as this, let's see. So basically got a lot of support right down here at 101 and a lot of resistance right here at 104.50. With all these tariffs and everything going into place, everyone's pulling levers like the Wizard of Oz behind the curtain and retaliating. And, I read The Art of the Deal, and what he's doing here, what Trump is doing here is, following that to a T. He is throwing out way more than what he really wants, and then he's kind of backing off and settling for probably what he really wanted in the first place. Macro picture, I got a lot of questions on tariffs. So basically, now this is just my opinion, but I think what we should be doing is we should look in the mirror as the United States and start reducing the size of our government and our government entitlements. And instead, what we're doing is we're ignoring the problem and we're blaming our neighbors. Okay, so that's just my opinion. I think that's what we should do, is we should reduce the size of our own government instead of pointing the fingers at other ones. But hey, that's me. Okay, so the dollar bounced. I think it's probably going to continue to go up just a little bit. That's going to be your resistance up there, like 104, 104.50, maybe a little bit right here at like 103.25. But I don't think it's going to cross below this 101 next week at all. Okay, now the U.S. 10-year Treasury, the benchmark for money, down 5.9%. So this bear flag played out, and this is the basically the measured target right here. So we got it from, hang on, I got to redo this one there. I measured it slightly wrong. Okay, so we'll go from here down to there. Okay, it's down 0.53%. And then they break out to the downside. See, I think this could still go lower. This could go down to like 3.6 or so. Did have a pretty bullish reversal bar right there. So maybe that doesn't happen. I mean, immediately in the charts, it looks like it's going to go up, but I think there's still some downside risk on this thing. My whole 5% target for the 10-year Treasury, I don't know that that's going to happen. I think this might get cheaper. But anyways, closed at 4% for the week. And the 2-year is down 6.9% for the week. So bear flag played out in that one as well. Got down to 3.5 and then bounced and closed at 3.64. And the 10-year yield minus the 2-year yield. So we're still in normal times. Got a bounce right there. It seems to be obeying this middle channel trend line right here quite a bit. So I think as time goes on, we will still... long duration debt will still pay more than short duration debt. I don't see this correcting back down into upside down clown world. And 1-month Treasury is still paying 4.3%. So remember, whatever cash you got, that's what it's paying. And LQD finally got a position in this one. Glad to have gotten it. I think I have, what is that? That's about 0.25% of my portfolio I put in this. So Christopher was asking a question about this. I've been getting some questions on this, so not just Christopher, but if you go back and watch the episode with David Skrika, we go into this bet quite a bit, and I think that explains it pretty well. Basically what I'm doing, I bought 2 puts, one at a $99 strike price, another one at a $100 strike price, and they expire October 17th, so they basically expire in 6 months. And what that means is if this gets down to about 98 or 100 or so, maybe 98, 99, then these will start to pay off, and they'll pay off handsomely once they reach that strike price. So what I'm betting on as a hedge is a moment like this Charlie 19er over here. See how, so this is corporate debt, all right? Now, corporations have taken on massive amounts of debt since the great financial crisis. I mean, they just keep taking it on, right? And because the government had, interest rates set at almost free money for a while, there was no penalty for them doing so. This is essentially a bet on a stock market crash, and then this one should correct. Once bonds start to fail and these start to fail, this will have a washout moment like that, I think. And if it does, it'll generate a lot of cash, and then you can use that to buy any of the stocks that you've been holding out on. No matter, like what happened this week, the baby got thrown out with the bathwater. There's some really good, deals here, but even gold got hit, silver got whacked. And even though those are money itself, what's happening is people are getting margin called, and they got to sell anything that has a bid, right? If these get smoked in a liquidity crisis, then the cash position that this generates should be really, really good. And that's basically what the bet is, Christopher. So if you like concepts like this, be sure to check out my free newsletter. I know a lot of you have signed up, so very glad to have you. Thank you. There's a link in the pinned comment below where you can get it. And let me know what you think. Let me know what you'd like to see in the newsletter. It's for you, so I'll tailor it to whatever you want to hear about. Let me know about the companies that you want to see, and let me know about the companies that you don't want to see. I mean, like if there's some of these that I'm going over every week that I'm basically just talking to myself and none of you guys have them, then there's no need for me to bring them up. Okay, and gold down 2.5% for the week. So finally getting a little rollover here in gold, which is nice. So I think for the new guys to the channel, this is going to be your zone right here. I think you got about a 75% chance that this thing will hit right around 27 to 2,800 for gold. I don't think that's going to hit next week, but I do expect gold to continue to get sold off. Gold divided by the S&P 500 finally had a breakout here after forever. After 4 years, it's finally broken out. We are in a true gold bull market. Even though gold went down 2.5%, it went down less than the S&P 500, so this chart went up. So just breaking out, absolutely fantastic. This is literally showing that people are selling shares of the S&P 500 and buying gold. And CEF, physical gold and silver. So basically, what you want is, this one's down 5.6%. So new guys to the channel, this is kind of how we line it up here. So the red is like a starter position. This next one would be like a limit order, right? And as this goes down, the deal gets better. So basically, now if you look at like Gareth Soloway, what he does is at each one of these levels, he'll buy like 25%. Instead of establishing one position all in one bet, you want to kind of stagger it, right? Kind of ease your way into it, right? So he'll buy 25% of a position, 25%, 25%, and 25%, right? I prefer to be a little bit more aggressive as long as nothing in the narrative has changed. You know, like if they come out and say, hey, we balanced the budget, Doge committee succeeded, then sell all your gold because this thing is going to go in the toilet. But I don't think that's going to happen. So as this gets cheaper, and if we continue to experience a liquidity crisis, this is going to get sold. And, you know, the cheaper you get, the more you want to buy because the deal's even better, right? So I prefer to look at this red line, which, you know, you guys that are watching the shows already hit it at 26.50. So now we can delete that one. You're in. That's your 10% bet. And then 20% bet right here at 25. And then 30% bet here at 23.60. And then 40% bet here at 21.75. So like you buy more on the way down, right? Okay, this is the first one you want to start out with the, you know, other than if you want to get some, you know, physical gold and silver coins or something. This is a really easy way to do it on the stock market. The ticker is CEF. And PHYS, so this is physical gold on the stock market. This one is down 1.8% for the week. I like starter position here at 22.50, then 21 and 20 as your limit orders. GDX down 8.5% for the week. So looking great, probably going to continue going lower. Starter position here at 40, then 36, then 33.50. You know, so yeah, I think they're pretty undervalued right now, but I also think that they're probably going to get cheaper. GDXJ down 9.6% for the week. So I don't see any buys right now other than this first one right here. So it went through your first limit order here at 52.50. The next one I'd be eyeing like a hawk right here. Just put in your limit order and forget about it. $47. And then stink bid in here at 41.50. Franco, Nevada down 6.7% for the week. Massive selling on Friday. Absolutely fantastic. So I said 2 weeks ago, if you wanted to take profits in this, you know, probably a good time. And, you know, I didn't know that this is what that was going to waterfall sell like this, but, you know, the technicals got pretty high right here. I mean, RSI of 76, like, I mean, once it gets above 70, or, you know, alarm bells should be going off in your head. Personally, I'm waiting for the Cobre Panama deal to work itself out. In other words, that mine come back online, which I think it will. So I'm going to wait for that to sell. Or wait for that to trim my position in Franco, Nevada. But anyways, first entry points here, 137, then 128, and then 115. And gold, Royalty Corporation down 10.4% for the week. So I got a little bit more here on the drawback. So we got down to that first yellow line right here, 130. So your limit orders hit. We can get rid of that. Best buy target right here, stink bid, is at 118. And honestly, if gold continues to get hit and the stock market continues to sell off, a lot of these juniors are going to get absolutely whacked. And a lot of these green lines are going to get hit. So, you know, before I was like, I don't know, 10, 15% chance. I mean, those odds are going up by the minute as all of this gets sold off. Origin Royalties down 8.7% for the week. So anything below $1, I think, is a great deal. We're at 99 cents now, so that tells you all you need to know. I think anywhere around this 200-day moving average just seems to be obeyed, and we're below that now. So I like a buy now for Origin Royalties. Remember, we're going to be doing an interview with Patty Nicol, so be sure to get in your questions for Patty and in the post community tab. All right, now this one, Nations Royalty. I bought a small position into this, not a very big one, just a little tiny position just to establish. And Rick and I talked about this one for maybe 10 or 15 minutes on one of our recent episodes. He's got a position in it. I got a small position here just to see what happens as it continues to get sold off here. A lot of this is going to depend on what happens with Newmont's, with their royalty with Newmont. But limit orders only. My God, this thing is not liquid at all. Only 4 million is available to retail guys like us buying shares on the stock market. So, us collectively could buy the whole thing. Market cap's only 50 million, probably less now with a little bit of the sell-off. So speaking of Rickroll, we have a live question and answer coming up in the Rule Classroom. So make sure you join us over there. It will be this coming Thursday, April 10th at 12:30 p.m. Pacific time. The Rule Classroom is my favorite price. It's free. And if you want to get in on this Q&A, then you're going to have to join us in the Rule Classroom Plus, which you can try out also for free for 2 months. You can cancel before the 2 months is over and owe nothing if you don't like it, but that's not going to happen because you are going to love it. So I will see you there this Thursday. Be there or be square. Link is down below and in the pinned comment. And Barrick Gold is down 7.7% for the week. So we hit the red line here. So that's your first limit order. Got that one in. Done. Delete that. Next one's going to be down here at 1625. And all I'm doing is just looking at past price action right here, and where there's a lot of price action, that's basically where I'm putting it. You can put it down to 16 or maybe up a little bit, but that's your ballpark. And then your stink bid is going to be down here at $14. I do not think that $14 will get hit, but who knows? We had an S&P drop by 9% in a week, like just 6% today. So who knows? Anything could happen. Newmont, same kind of thing. Down 8.1% for the week. Baby getting thrown out with a bathwater here. Your first limit order is going to be here at $42, which will probably get hit. Stink bid down at $37.50. And what do we got? Agnico Eagle, same kind of thing. So this white line we drew as a level of support, it closed below that. So looking like there's probably some more downside here. I would like a first limit order at $89 and the stink bid in at $78. And B2 Gold. So it looks almost like we were psychic when we got out of this option. All I was doing was basically just looking at the technicals. That was it. Have a plan and trade the plan. And my target, my if-then statement was if it got up to 340. But I adjusted when I saw that the technicals looked like it was going to roll over. RSI 75, and see how it was just skyrocketing up, and then it kind of leveled out. That was your moment right there. So if you guys want to try out this software for free, there's a link down below and in the pinned comment below. I would have no idea when to, that was the moment to sell if it wasn't for the software. And you can try it out for free. I love it a lot. TradingView. So B2 Gold down 8% for the week. I don't really see any buys right here, but I do still like this line that we've been talking about for well over a year, $2.50 and $2.35. And Equinox Gold down 12.5% for the week. So I'm holding this one for the duration. I thought about trimming up here once it got north of $7 a share. Didn't do it. I guess hindsight being 2020, I regret that decision now because I could see the future. But I would be looking, if you're looking to get into this one, which I think it's a fantastic company, getting really sold off in the technicals here, I'd be looking at maybe a first entry point right here on the 200-day moving average, and then the bottom part of this channel, which also lines up with the 400-day moving average, which would be around $5.50. And G Mining Ventures down 12.6% for the week. So I'm past the point of concern on this one. I think it's 1.5% of the portfolio, and it was free. Down 12.6%. Yeah, like a first limit order here at $11, and then a second one in here for $9.50. And Rio 2 is down 12.5% for the week. So I think this is going to be a great one. They're commencing construction. This is a baby thrown out with the bathwater as well. I like first limit order here at 49 cents and then a stink bid at 41. And silver, story of the week, down, I wrote 16%. Is that even right? Yeah, that's correct. Down 16% for the week. So just amazing. I mean, I was honestly having doubts whether we were going to see sub $30 silver again or not, like ever. And there we are. Here it is. Okay, look, just lining up with some back support right here. I think now is fine. You know, call up your local coin shop. Call up Andy Scheckman. Please tell him that In It to Win It sent you, and it won't cost you an extra dime. And there's a... it'll kick back a little bit to the show, but look at this. I mean, sub $30 silver. We are here again. If you want to buy any physical, I'll show you other ones that are deals as well here too. Gold divided by silver. Look at this. Look at it. Maybe trade some of your gold for silver. You can trade one gold coin for 103 silver coins right now. I mean, just absolutely blew through this. Gold outperformed silver by 16%. So someone put in, there's a correlation, and this is why I drew this white line right here. There's a correlation when it breaks above the 91-to-1 ratio, and I can't remember what it was, but whoever it was, put it down in the comments below so that we can all learn from it. So thank you. Okay, now right here, if you want to get in on some PSLV, so longtime listeners have had their limit orders in here for $10.25. That one hit. We can now delete it. And next one is going to be $9.50. Maybe kick it up just a notch to like $9.75 or so. But this is a way to place physical silver on the stock market. And SIL is down. Let's see. So PSLV was down 12%. SIL is down 12%. And look at this, just hitting right on this upward channel trend line right here. So that might be good for a starter position. And then limit orders down in here at 32 and 30. And yeah, I like that one a lot right here. Trend line. We'll see if this gets broken or not. And SILJ is down 14.4%. So I almost pulled the trigger on this. You know, just nice little double bottom right here, lining up with some back support. However, I already got quite a bit of this, and I'm going to wait to see if it gets a little bit cheaper, which I actually think it will. So blew through this $12 line right here. We can now get rid of that. So that would be your 10%. This yellow right here would be your 20% bet. Then 30% would be at $9.75, and then 40% would be at $9. So if this washout continues, these are probably going to get hit. So make sure you got your limit orders set. And Pan American Silver down 17.1%. So absolutely got washed out. Got within like 50 cents of my take profits line up here at $28. And no dice, and then it just a complete washout. So it looks like we're in this one for a little while. Stink bid in here at $19. Speaking of silver, I just got back from Mexico. So I was looking at some land down there with the missus, and got a few questions on when is the vlog coming out. Vlog should be coming out next week. We took some videos down there. It's like a 10-minute one on the trip down Baja. If you guys want to check it out, then be sure to check out our social media sites. But I like that country just because the language is Spanish. I speak the language. The missus just got her dual citizenship, so now we can buy land near the ocean instead of, as a gringo, if you want to buy something, you don't actually own the land. You got to give the title to a bank that'll hold it for you, so I don't like the idea of that. But if you're a citizen, then you don't have to do that. You can actually hold the title. Insurance, I guess, in case anything happens here in the United States, then, and you can't or don't want to live here anymore, which I don't think is going to happen, but it is a little bit of an insurance play. And then being in California, I love the ocean and I love swimming, but I don't like the 65-degree water. So it's nice to be in water there. It's 80 or 85 degrees is like bath water during the summer. So I did a first travel vlog on that, and you can join the newsletter and you'll see when it comes out, or you can join our, our other social media sites. If you go to the homepage here on YouTube and you click more, then Twitter, here's where you can get money from, or get gold and silver from Andy Sheckman, Facebook, LinkedIn, Instagram, and TikTok, and that's where where it'll all be posted. So check those out if you're curious about Baja, Mexico. And copper, paging Dr. Copper, down 14.2%. So been following the advice of Adrian Day, Joe Mazumdar, Brian London, basically buy copper on pullbacks. And look at what we have here, boys and girls, a pullback. Outstanding, came all the way down to the 200-day moving average, just a massive pullback. Gold divided by copper, gold outperformed by 13.6% this week, so it now takes 689 pounds of copper to buy 1 ounce of gold. And COP.U is down 7.7% for the week. I might wait a little bit for copper to kind of settle out here. Maybe we're going to get a bounce here off the 200-day moving average. Maybe not. I don't know. I'd be more inclined to, purchase this COP.U on kind of this upward channel trend line. Maybe do a starter position now. Got a question from G. Meir. He says, where are you buying this? On Interactive Brokers. That's the one that I could find that doesn't charge an outrageous fee every time you want to make a purchase, is Interactive Brokers. Or if you just want to wait for a real discount, I think Schwab will allow you to do it, although don't quote me on that. And it's under a different ticker. It's like SC, I'm not even going to say it because I can't remember. But anyways, Interactive Brokers makes it real easy. They don't charge you $50 every time you want to make a buy. And I think this is an easy way to, for newbies in the copper market, establish a physical position in copper first, and then after that, get into the equities. And, this will be the air quotes safest way to play it. But there is technical support here on $7 and then down here at basically 6. So those could be some starter points for you. All right. And COPX down 18.4%. Awesome here. Had some limit orders hit. So we had some limit orders set at 38 and then 36.25. So the $38 limit order, or you know what? I take that back. It didn't have one set here, but because I bought them over here, but I know a lot of you guys did. So if you had that limit order set, then it probably hit here at around 37.50. So we can delete that one. And this one at 36.25 got very fortunate it did not fill here because the low there was 36.30. So then it actually filled right here at 34. So pretty cool. We can move this line down now as far as a best buy line. And I think, where would be the best way to put this? If it's going to go lower here, I kind of like this price action like right in here, maybe around 25.50 or so, lining up with some of that. Let me pull up the weekly. Yeah, that looks pretty good. Okay, so somewhere in that ballpark, maybe $29 to $30, I think looks pretty good for your next limit order. Oh, I already put in a limit order. What did I put? I put 28.50. Okay, so there we go. So I had a couple of orders here hit. I didn't check my put now that I'm thinking about it. I'll have to check that. So I don't know if that one hit or not. So right here at 34, and then got another one down here at 32.41. COPJ had some limit orders hit, 17.75, and then another one at 17.35, and got one last one in here at 16.55, and it got down to 16.55 and a tenth of a penny. So it didn't fill. But that's the stink bid down there at the bottom, just lining up with some back support. That's all that was. Hopefully it gets filled. I don't know though, because it came down and then bounced back up. So we'll see. But might get lucky. And Freeport is down 24.1%. So your limit orders here hit 36, boom, filled. We can delete that one. And then this one here at 33 actually ended up filling at like 31 because it gapped down through that. So when the market opened, that's where it hit. Now, where could we put this next one? I'm going to say same kind of thing, just like the COPX chart, just kind of following that same pattern. And I would put it down, somewhere in there, maybe the 27 range, 2650, something like that. And then after that, I would put your next limit order in down here around 19 bucks. Boom, right down there. This one should actually be green, and that'll be yellow. I'll fix that by next week. All right, and Maduro Capital down 15.3% for the week. So I had a nice little run up here and then came back down. And looks like it's getting caught there by the 200-day moving average. Not a whole lot of volume on this one, just because the market cap is so small. I think the market cap's like 10 or 11 million, something like that. Let's see, 14 million, close enough. So not a whole lot of volume here. I like a limit order down here at 11 and a half cents. And uranium. Oh, this is one that was up. The uranium spot price is up 0.2% for the week. So we had something that was up. Now remember, that was up a tiny bit, a fifth of 1%. Gold divided by uranium. Gold underperformed uranium by 2.8%. Now look at this. So uranium, the spot price of uranium is up a tiny bit, but SRUUF, the Sprott Physical Uranium Trust, is down 5.6%. So this is what we call an opportunity. Like in the cash flow game, when you draw an opportunity card, that's what this is. Okay. We're getting another good discount here. I didn't check to see what the discount was, but I know it's north of 12%. And looking fantastic. I didn't make a purchase here, although I did do some other purchases down here. But this one is a smoking deal right now. And Cameco is down 9.6% for the week. So we hit this little double bottom that we're talking about with Daryl on his show. Oh yeah, if you guys didn't see that, I did an interview with Daryl Thomas over at his channel, the Money Level Show. It's in one of the posts. I put it up there for you guys. Let me know what you think. And this one came down through the yellow, so we can get rid of that limit order at 41.25. That one hit for you guys. The next one is going to be 36, and it will probably hit. URNM down 9.9% for the week. So absolutely looking fantastic. So got through this first one here at 34. I'll get rid of that and then hit again down here at 30 bucks. So you guys got your limit order in there. I realized that I did not have a limit order in for 30 like I thought I did. So I logged in and I got it even cheaper, 29.29. So that's my entry point there. RSI is at 24. Doesn't look like it's quite ready to turn over yet. So we might get a little bit more selling. But remember, this is why 1 out of every $5 in your brokerage account is cash for moments and washout sales like this, where you can really, really take advantage of it. And this is where you make your money. Hopefully it goes lower. I would like to see it get washed out even more. We know fundamentally that uranium, well, we don't know, but we believe fundamentally that uranium is going to do quite well over the next few years, and these are moments to take advantage of. URNJ down 11.7% for the week. So we're making history here. Cheapest share price. Remember what we were talking about last week about how, it came down and hit almost exactly within a penny or so of its low here. Well, it blew through that. RSI 25. Haven't really seen a turn up yet in the technicals, but I made a purchase anyways, $12.40, and then also made a purchase here on Uranium Royalty Corporation. This one is down 9.6% for the week. So got some more here at $1.61. And then limit order is set down here for $1.50. Maybe it'll hit, maybe not. Maybe I'm being a little too cheap, but I think it's got a pretty good chance of hitting. And Uranium Energy Corporation, I didn't think either of these would hit down here. I had a limit order in for $4.50 since it gapped down I got it for, what did I get it for? $4.36. So that's awesome. And then the next limit order for $4.12 hit. I'm pretty happy with my position here. As far as where is the next level that it could hit, I see a lot of price action right around there. So maybe $3.30. Maybe we'll get lucky and hit it. I hope so. All right, and crude oil. Oh yeah, so Uranium Energy Corporation was down, what was it, 15.1%. All righty, crude oil is, WTI is down. Finally broke down. We've been looking at this forever. Like, is it going to go? Is it not? Maybe this is a moment in time and it's just going to wick back up and it's not really going to count like this. So it isn't necessarily a confirmed breakdown. But, it did close the week there. So that's something. Basically closed 61.99. So broke below that 79 mark, right? Now, as far as next levels that I see, down 10.6% for the week. I mean, we're kind of getting into like the mid 50s here, like as far as the next level to catch it. I mean, you got a little bit at like 58, 59 dollars, but I think the majority of the price action is closer to 55. So at that price, oil companies are not really having a good time. They're not making much profit. So I don't think it'll stay down there long, if it does. And I think it's a buying opportunity. All right, and Brent is down also 10.6% for the week. Gold divided by crude oil. So gold outperformed this week by 9%. So pretty exciting there. And this is the one that we've been talking about forever, and it finally hit. Okay, so there's number 4 right down here, the 40%, right? So we bought 10% there, 20% there, 30% there, and then just had to wait almost a year for the number 4 to hit, and it finally did at 79.75 or 79.25. What was it? 79.75 finally hit. So we got in there. Why did I get it cheaper? I'm not sure. But anyways, I got it at 79.38, same thing. But just lining up with a little bit of back support right back here was all that was. Thank you, TradingView. Hopefully oil gets smoked and hopefully oil continues to go down more, and then we'll be able to pick up even more and get it cheaper. We'll see. Also having a couple of guys, Pete and Steve over at the, let's see, where was it? Elliott Wave International. So this is kind of exciting. These guys apparently like focus on basically forecasting, kind of like what we're doing here. I don't really know anything about Elliott Wave theory, so I'm really looking forward to this interview. Check out their submit your questions in the post tab for upcoming interviews for Steve and Pete and all things Elliott Wave. I'll put a link to their website down there. And Exxon Mobil is down 11.4% for the week. So I was talking with my buddy Daniel, and I'm like, do we buy here? Do we not? I'm like, this one company is already like 5% of my portfolio. Do I really need more? And anyways, I decided against it, but now is good, I think. RSI 31. No real indication that it's going to turn over, so I think we might actually have a little bit more selling. So if you want to get some more on Monday, it'll probably be a little bit lower, but sometimes things are cheap enough. This is just getting a washout sale here, and baby thrown out with the bathwater. Same with Chevron. I mean, we were talking last week or the week before, like, oh yeah, first orders are down here, and I mean, it just looked like an absolute pipe dream when this thing was $168 a share, and now it's 143. But looking like they're going to hit. So first limit order here at 41.25, second limit order at 135.50 for Chevron, and that one is down 13.7% for the week. And Canadian Natural Resources, so I like this company a lot, although I don't own them yet. I probably should. Still in an established downtrend, but it looks like the 27.50 mark is going to get hit again for a limit order. There we go. Blackstone Minerals is down 8.3% for the week. So your $14 limit order hit. Congratulations. I just did the math on that. So for $14, it works out to be a 10.7% dividend rate here for Blackstone Minerals, assuming they keep their dividend. Now, if oil gets whacked, they may not be able to upkeep that dividend quite as good because a lot of these oil fields are going to start, just not pumping oil. But assuming that they do, then you got a 10.7% dividend at that price point. And freehold royalties down 11.8% for the week. So if oil keeps going down, I don't know that they can maintain this 9-cent dividend every month. We'll see how that plays out. But at these levels, you got to, if they do, it's a pretty good dividend. All right, and natural gas is down 5.6% for the week. Still in an uptrend. Looking like we might have an established trend line here with at least 3 bumps. You need at least 3 points to make some kind of trend line. I didn't notice this until just now. Let me see. Okay, so it could have an upside target around $5, which is kind of where it was, and then 570. And then also if we do a retracement here, is that the 61.8? Yeah, it kind of is. Okay, so I'd be looking if you're betting these futures, probably correct down a little bit. I would say it'd correct to $3.71, 72 cents, and then we get a little bounce, but we'll see. Totally guessing there. Devon Energy, absolutely fantastic, down 20.3%. So it was a deal where it was, and it was a real deal at 33.25, blew through that. So you got that limit order that hit. We can now delete that one. And then the stink bid in down here for $30.39 also hit, and it got even lower. I thought about buying more of this, and this is kind of like Exxon for me. I mean, I've just got so much of it. I think it'll do well. I probably should buy more. I should probably put another 0.5 or 1% in this thing. Yeah, fantastic. Woodside Energy down 22%. So I'm regretting my decision not to sell this over here when I could have got 15 or 16 bucks for it and putting it into uranium. I may actually rotate out of this and just throw it into Devon. That might actually be the move. Birchcliff Energy is down 9.5% for the week. So limit orders at $4, and then another one down here at $3.15. And Pado is down 7.6% for the week. So maybe one here at the 200-day moving average around $11, but I still like the 1065 level a lot, and then the 975 level. And coal, thermal coal's down 8% for the week. So we broke through that $100 mark in thermal coal. Met coal's actually up a tiny bit, 2% for the week. And our favorite coal ETF just fell completely out of bed. Looks like this was a bear flag that played out. I don't know how much stock you can put into that, but just fell completely out of bed. Coal's approaching hated. I think now is a good time to get in this. I should probably get a little bit more. But yeah, like this fund a lot. We are down to 11.4 million assets under management and 700,000 shares. And Glencore bought a little bit more of this one, got it at, $6.03. So it broke through this line right here that we had a best buy line drawn of $6.50, and it got even below that, got down to $6. Now we're going to move the green line down even more. Where is there a lot of price action? Maybe $5.50. I would say probably closer to here, maybe like $4.50, something like that would be the next limit order. AMR continues to this point, down 14.2%. I guess I'll move the red line down, or the green line down again. I thought that 118 would hold, but with this recent market sell-off, that doesn't seem to matter. I mean, this is a little scary here, but the next real price action that we have isn't for quite a while. Let me back up to the weekly here, and we can see it. Yeah, right around there. It's like 79, 80 bucks, something like that. So I don't know that it will get that low. It's our RSI is already 22 on the weekly, 24 in the daily. How much lower can it go? We'll see. And BTU down 23.7% for the week. I don't own any of this. I just use this for trading in and out, in and out. And I haven't really found anything yet that would make me think that, now's the time to put another trade in on it. Let's see, where's the next level here? Maybe around there, like 950, something like that, as far as some support. And platinum down 8.2% for the week. So this is finally looking great here. I like limit orders right here at $900 per ounce of platinum. Get those through Andy Sheckman, or you can buy it here on the stock market, PPLT. So you had your first limit order here hit at 85. Done. Get rid of that one. Next one is at 82.50, and after that 80. And Palladium is down 7.8% for the week. Same thing. Limit orders at $900. You can get Palladium coins through Andy Sheckman or at your favorite coin dealer. Like it around $900. And PALL, first limit order at 85 hit. Next limit order is going to be here at 83, and after that $80. And SPPP getting exciting here. So it broke through this 200-day moving average and all that. And now I think the first limit order you're going to want is at $9. That's kind of been our idiot-proof number for a while now, is $9 per share. Maybe it'll blow through that, maybe not. After that one will be $8.75, but I like that as a starter position right there around $9. And platinum divided by silver, finally getting a bid here. So silver got all the way down to 28 ounces of silver for 1 ounce of platinum, and now we're up at 31, so basically a kilo. And this is the one that's still getting exciting. And here's my plan with platinum and gold. So if platinum gets to parity with gold, in other words, 1 ounce of platinum for 1 ounce of gold, then I'll trade half of my platinum for gold. Right now, you can trade 1 gold coin and get 3 platinum coins. That's almost unheard of, right? After that, if platinum gets to 1.5 times the value of gold, then I'll trade 30% of my platinum for gold. And then if platinum gets to 2 times the value of gold, then I'll trade the remaining 20% of my platinum for gold. So that's my plan with the trimming there. And nickel is down 10.2% for the week, the commodity itself. So it broke our little green line here, didn't obey that. Apparently when recession and depression is in the cards, nobody cares. Man, I guess 14.5 would kind of be the next level of support, and that's basically where we are now. And NICL down 10.8% for the week. I think establishing a position in a hated commodity now is a decent time. I mean, just as this gets cheaper, the bet gets better and better. I don't know when this is going to reverse. One of my worst performers to date, other than coal, but excuse me. We'll see. We'll see. I think now is fine. I don't really see anything technically on the charts. I mean, other than that reversal bar, pretty bullish reversal bar there on Friday to reverse this thing. But, nickel's hated. Buy commodities that are hated. This is one company, a junior company, that you could focus on to do that. Centaurus Metals down 4.5% for the week. So I've been waiting for a while for it to kind of hit this bottom part of the channel. It did so and even got below that and hit that 21-cent mark. So congratulations. If you're waiting around for that 21 cents, it finally hit. All right, and the Bloomberg down 5.8% for the week. So established a position here. Got in at 99.71. I think this one will do pretty well in a commodities bull market. I think this is just getting, they're getting margin called and fund managers are having to sell. And I think that's the only reason this thing really got hit. And iron ore still trading in the middle of the range here, down 1.1% for the week. BHP made some purchases here. So with the China retaliatory and all that, a lot of uncertainty about copper and everything. And so this one got absolutely whacked. Got it at the cheapest I've ever bought BHP at, $42.11, down 14% for the week. I think now is fine as far as some support right there, basically where it is now. After that, support is going to be right around there, around $39. And Rio Tinto down 10.4% for the week. So if you had your limit order in there for 58.50, unfortunately, it looks like it hit on Thursday. And then, of course, it gapped down. So if that didn't fill, you would have got it for 56. Hindsight's 2020. Coming into some support right back here. So I think now is fine. We'll start setting up some more limit orders and lines for you down below here. And the PIC ETF. So this one got washed out. So if you had your limit order set for 35, you got it a tiny bit cheaper than that. We can delete this green arrow here because it is no longer in an uptrend. So 35 hit, we can delete that one. And also 33 hit, and it filled for you if that's where your limit order was. It filled at 32 and change. And we will move this back down, and it looks like there's a decent amount of price action right around 27 to 28. So kind of in this ballpark here, 27, 28 bucks, I think would be the next one for your limit order. And the China ETF, MCHI, down 8.4% for the week. So Daryl Thomas turned us on to this one, started watching. We're going to want to wait for this to sell off a little bit more. I think we're going to have a little bit more selling here. Support right here at around $46, $47. Might become interested around there or around the 200-day moving average. Daily RSI is 30 on the RSI. And Bitcoin is, as of this moment, recording on Friday, up 1.9% for the week. And this is holding up surprisingly well. So I didn't expect this to hold up so well, but it is. You know, I thought it would trade a little bit more like a tech stock. Maybe it will in the long run. I think the new administration is definitely helping out the crypto crowd and making it, I think what they're going to do is they're going to put a lot of money. They're trying to get people to pump into, like Doomberg was saying, get into the crypto markets. They have to, hold the cash in a stable coin, and essentially what that stable coin is going to do is buy treasuries. So it kind of a backdoor way of getting people to buy treasuries, which is, I think, exactly what the administration wants. Alrighty, well, I hope you guys got something out of that. Be sure to join the free newsletter. Comes out every Sunday at 10 a.m. Pacific time, an hour after Monday Market Moves airs. Thank you guys for always being here. Love you guys. Be sure to support the show and share this with anyone that you think needs to hear it. Probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.